5 top mistakes that I see advisors make. This is the QBI deduction being screwed up. So very often when advisors are in when they're in kind of the beginning thresholds of really scaling up the practice, they'll be under the limit for SSTBs, is what we call them, a specialized service, trade, or business. And so you can get your advisor practice to qualify for the QBI deduction, which is roughly a 20% deduction on the profits of the business. Now, once you get up above that, that starts to phase out pretty quickly. But the core mistake that I'll see advisors make, and this happens on returns prepared by tax professionals too, is sometimes they won't check the box that it's an SSTB, and so they'll be claiming QBI at too high of profit numbers because there's a threshold there. Or I'll see the opposite, where they're not claiming QBI at all for statutory W-2 income. That's insurance commissions, which is not an SSTB. You would think it would be, but it's actually not. So those are the 2 QBI mistakes that I see most often. Oh, and one other one that's worth a mention is oftentimes I will see that there's no planning around the QBI, where the organization is qualifying for the QBI, but there's a limitation because of wages, and usually we can fix that by either paying some owner's compensation through the S, if they're in an S corporation, fixing the W-2 compensation there, or just looking for other ways to get them out from under the cap or control some profits better so that we can get them into the threshold.